Trump says Microsoft is in talks to acquire TikTok. On January 28, 2025, during a press event, former President Donald Trump confirmed that Microsoft is currently in discussions to acquire TikTok, a popular social media platform owned by the Chinese company ByteDance. This announcement comes amidst ongoing debates about national security and the app's ownership, which has been a contentious issue in U.S. politics for several years. Background and context. The discussion regarding TikTok's ownership has been ongoing since 2020, when Trump first pressured ByteDance to sell its operations in the U.S. or face a ban due to concerns about data privacy and national security. These concerns are rooted in the fact that TikTok is owned by a Chinese company, leading to fears that user data could be accessed by the Chinese government. Both Trump and President Biden have emphasized the necessity of divesting TikTok from its Chinese parent company. In August 2020, ByteDance approached Microsoft as a potential buyer, which the company later described as the strangest thing. Although discussions were initiated, they did not materialize into a deal at that time. Instead, TikTok later considered Oracle as a partner, yet that deal also fell through. Recent developments. In his recent statements, Trump indicated that he is pursuing a bidding war for TikTok, reflecting a keen interest from various high-profile bidders. He stated, "I would say yes," when asked if Microsoft was preparing a bid, and mentioned the strong interest in TikTok from several companies. Trump reiterated his desire for a substantial U.S. ownership stake in TikTok, advocating for a scenario where there would be no involvement from China. Last week, Trump signed an executive order that postponed a Biden administration ban on TikTok, which had briefly threatened to cut off access to its 170 million U.S. users. This reprieve has provided some temporary relief for TikTok, which accounts for around 4% of the U.S. digital advertising market. Key points from Trump's statement. 1. Acquisition talks. Trump confirmed that Microsoft is actively involved in discussions to purchase TikTok's U.S. operations. He expects to reach a decision within 30 days. 2. National security concerns. The push for the sale is primarily driven by concerns over national security related to TikTok's ownership and the potential risks of data access by the Chinese government. 3. Evaluation. Reports suggest that TikTok's U.S. operations could be valued at between $40 billion and $50 billion. Highlighting the financial stakes involved in the acquisition. Potential bidders and competition. Aside from Microsoft, other potential bidders include Oracle billionaire Frank McCourt and even high-profile figures like YouTuber Mr. Beast. The competitive landscape suggests that there is significant interest in TikTok, with various parties vying for ownership or operational control. Implications for the market. The outcome of the acquisition talks could have substantial implications for the digital advertising landscape in the U.S. Given TikTok's young user demographic, which consists predominantly of teens, its acquisition could be a strategic asset for any tech giant looking to bolster their presence in social media and digital marketing. Furthermore, should Microsoft or another bidder successfully acquire TikTok, it may reshape the competitive dynamics among social media platforms. The deal could also influence advertising strategies, especially considering TikTok's significant market share and user engagement levels. Conclusion. The discussions between Microsoft and TikTok's parent company ByteDance reflect a complex interplay of corporate strategy, national security concerns, and market dynamics. As Trump navigates the potential acquisition, the stakes are high not only for the companies involved but also for the millions of users and advertisers who rely on the platform. The coming weeks will be crucial in determining the future of TikTok in the U.S., and the outcome may set a precedent for how foreign-owned tech companies are treated in the American market. The content discusses President Trump's confirmation that Microsoft is in talks to acquire TikTok, emphasizing national security concerns and the desire for a bidding war among potential buyers. The focus is on the implications of such a deal for both tech companies and the broader digital advertising market. Counterintuitive information. 1. Bipartisan pressure. it is notable that both Trump and Biden have pressured TikTok's parent company ByteDance to sell its U.S. operations. This shows a rare alignment in the political landscape, with both parties prioritizing national security over other considerations, which is often not the case in U.S. politics. 2. Trump's executive order delay. Trump's recent executive order that postponed a ban on TikTok reflects a shift from his initial hardline stance to a more negotiation-focused approach. This indicates a tactical change, suggesting that he sees value in negotiating a sale rather than outright banning the app, contradicting the previous narrative of an imminent ban. 3. Potential valuation versus user base. The estimated valuation of TikTok's U.S. operations at $40 to $50 billion contrasts sharply with its user engagement metrics in the U.S., where it holds a 4% share of the digital advertising market. This suggests that despite its relatively small share, TikTok's influence and growth potential justify a high valuation, which can seem counterintuitive in a market where traditional metrics often dictate value. For diverse interests in acquisition. The interest from a wide range of bidders, including not just tech giants like Microsoft and Oracle but also personalities like YouTuber MrBeast and investor Frank McCord, highlights an unexpected democratization of interest in tech acquisitions, where even non-traditional entrants are part of the conversation. 5. Youth engagement metrics. The statistic that 63% of teens aged 13 to 17 use TikTok compared to 59% for Instagram indicates a shift in social media dynamics that could be surprising. It reflects not just a change in user preferences but also the potential for TikTok to disrupt established platforms, suggesting a broader trend that may challenge conventional wisdom about audience loyalty in digital spaces. These counterintuitive points illustrate the complexities and unexpected dynamics at play in the acquisition talks surrounding TikTok, encompassing political, economic, and social considerations that diverge from standard expectations in corporate acquisitions and market behavior. In the context of the ongoing talks regarding Microsoft's potential acquisition of TikTok, there are several important facets of the situation that many observers may overlook, despite their significance. Here are some key elements that merit deeper consideration. 1. National security rhetoric versus actual risks. While national security concerns have been positioned as the primary justification for the acquisition, it's essential to scrutinize the validity of these claims. The narrative built around TikTok's Chinese ownership has been fueled by fears about data privacy and the potential for espionage, but actual evidence supporting such claims has often been anecdotal or speculative. The broader implications of this rhetoric suggest a possible escalation of tensions between the US and China, moving beyond TikTok itself to encompass wider technological and economic competition. This scenario could lead to a more fragmented global digital economy where companies are forced to choose sides based on geopolitical alignments, potentially stifling innovation and collaboration in the tech sector. 2. The concept of a bidding war. Trump's desire for a bidding war over TikTok is not merely a commentary on the competitive nature of the acquisition process, it reflects deeper strategic interests. A bidding war could inflate TikTok's valuation far beyond its estimated worth of $40 to $50 billion, which could have ripple effects across the tech industry. Such inflated valuations can set precedents that affect how future tech acquisitions are negotiated and valued, leading to a potential bubble in tech valuations. Moreover, the involvement of figures like MrBeast and other celebrities underscores the increasing intersection of entertainment and technology in digital platforms, which could shape the future of user engagement and monetization strategies. 3. Impact on digital advertising. TikTok's significant market share, 4% of the U.S. digital advertising market, highlights the app's potential as a lucrative asset. The acquisition could reshape the competitive landscape for digital advertising, particularly affecting companies like Meta, formerly Facebook, that have dominated this space. The younger demographic that TikTok appeals to represents a critical segment for advertisers, and control over this platform could translate into substantial advertising revenues. The implications of this shift could influence advertising strategies across the board. prompting other platforms to adapt to retain user engagement and advertising dollars. 4. Corporate strategies and market dynamics. The acquisition talks are not isolated events but rather part of broader corporate strategies reflecting Microsoft's aspirations to expand its influence in social media and digital advertising. This move can signal Microsoft's intent to diversify its portfolio and mitigate risks associated with its reliance on traditional software sales. The competitive dynamics also raise questions about Oracle's potential involvement and how such partnerships could change the corporate landscape. The entry of tech giants into social media ownership could lead to significant shifts in how these platforms operate and are regulated. 5. Youth engagement and cultural shifts. The demographic makeup of TikTok users, primarily younger individuals, illustrates a cultural shift in how social media platforms are used. This generation values authenticity, creativity, and engagement over traditional advertising methods. Acquiring TikTok could allow Microsoft to tap into these cultural trends, providing insights that traditional tech companies may overlook. Companies that understand and adapt to these shifts will have a competitive advantage in the evolving landscape of social media. 6. Potential backlash and regulatory scrutiny. The acquisition could attract scrutiny not just from the public but also from regulatory bodies concerned about monopolistic practices. The ongoing debates around data privacy and user rights could be exacerbated by such a high-profile acquisition, potentially leading to challenges that Microsoft may not anticipate. This scrutiny is not limited to the US. International regulators in Europe and Asia may also weigh in, complicating the acquisition process and its implications for global operations. 7. Long-term implications for technology ownership. The discussions around TikTok reflect larger concerns about technology ownership and sovereignty. If TikTok were to be acquired and become a part of an American tech giant, it raises questions about the future of other foreign-owned tech companies operating in the US. The precedent set by this acquisition could lead to a wave of similar pressures on other platforms, potentially reshaping the global tech ecosystem. This scenario also highlights the importance of understanding the intersection of technology and policy as governments increasingly engage with private companies to safeguard national interests. Conclusion. The ongoing acquisition talks surrounding TikTok and Microsoft's involvement encapsulate multiple layers of significance that extend beyond the immediate financial implications. From national security concerns to shifts in digital advertising, corporate strategies, and cultural engagement. These discussions reflect broader trends that will shape the future of technology and media. Observers should remain vigilant to these nuances, as they will likely influence the trajectory of digital platforms and their role in society for years to come. The stakes are high not just for the companies involved but for users, advertisers, and policymakers navigating an increasingly complex digital landscape. 1. National security concerns and ownership stakes. The discussions surrounding the potential acquisition of TikTok by Microsoft are heavily influenced by national security concerns due to TikTok's ownership by the Chinese company ByteDance. Both Trump and Biden have cited these concerns as justification for pushing for a sale, emphasizing that the U.S. desires a substantial ownership stake in any new structure. Ideally, a 50% stake with no Chinese involvement. This reflects broader geopolitical tensions and raises questions about data privacy and the control of technology in the digital age. 2. Valuation and market dynamics. TikTok's U.S. operations are valued between $40 billion and $50 billion, highlighting the financial stakes involved in this acquisition. With TikTok commanding a significant share of the digital advertising market, approximately 4% in the U.S., and boasting 170 million users, primarily younger demographics, the app's value extends beyond mere user numbers to its influence in shaping digital marketing strategies and advertising revenue. 3. Potential competition and bidding war. Trump's comments about a bidding war signal intense competition among tech giants and investors for TikTok. Beyond Microsoft, other high-profile bidders include Oracle billionaire Frank McCourt and even celebrity figures like Mr. Beast. This competition could drive up the purchase price and alter the landscape of social media ownership, indicating that TikTok remains a highly sought-after asset in the tech market. For implications for the future of social media and advertising, the outcome of TikTok's acquisition talks could have significant implications for the future of social media and digital advertising in the US. Should Microsoft or another American entity successfully acquire TikTok, it could reshape the competitive dynamics within the industry, particularly concerning rivals like Meta, formerly Facebook. Additionally, the acquisition could set precedents for how foreign-owned tech companies are treated in the U.S. market, impacting investor strategies and regulatory approaches to technology and data privacy. 1. The AOL-Time Warner merger 2000. This merger was one of the largest in history, with AOL acquiring Time Warner for $165 billion. It was heralded as a groundbreaking union of traditional media and the Internet. However, cultural clashes and a rapidly changing digital landscape led to significant losses and a decline in value, with the merger ultimately being viewed as a failure. The discussions and negotiations surrounding the merger were marked by high expectations and significant national and international interest, similar to the TikTok acquisition talks involving Microsoft. 2. Facebook's acquisition of Instagram 2012. Facebook acquired Instagram for approximately $1 billion in cash and stock, which at the time was seen as a bold move in the social media space. The acquisition was driven by Facebook's desire to dominate the mobile photo sharing market. This strategic decision, however, was not without its controversies, including concerns over user privacy and the impact on the competitive landscape. The deal ultimately proved to be immensely beneficial for Facebook, as Instagram has grown to become one of the leading social media platforms globally, a trajectory that mirrors the strategic interests Microsoft has in TikTok. 3. Disney's purchase of 21st Century Fox 2019. Disney acquired 21st Century Fox for $71.3 billion, a move that significantly reshaped the media landscape. The acquisition was primarily motivated by Disney's desire to enhance its content library in preparation for the launch of its streaming service Disney+. The deal faced scrutiny over its potential impact on competition and media diversity, much like the national security concerns raised regarding TikTok's ownership. The strategic negotiations and the implications of this merger resonate with the broader themes of ownership, competition, and regulatory scrutiny seen in the discussions around TikTok's acquisition. Future outlook: predictions for TikTok's acquisition and its implications. As discussions surrounding the potential acquisition of TikTok by Microsoft continue, several predictions can be made regarding the future of the platform, its ownership structure, and the broader implications for social media and digital advertising. 1. Acquisition finalization and ownership structure. Given the current momentum of negotiations, it is anticipated that Microsoft will finalize its acquisition of TikTok's U.S. operations within the next few months. The deal is likely to be structured as a joint venture, with Microsoft aiming for at least a 50% ownership stake. This arrangement would ensure that U.S. interests dominate the platform, addressing national security concerns that have been paramount in the discussions. 2. Market valuation and financial impact. The valuation of TikTok's U.S. operations is projected to be between $40 billion and $50 billion. Following the acquisition, it is expected that TikTok will further increase its market share, especially among younger demographics. This could result in a substantial boost to Microsoft's advertising revenues. Given that TikTok currently accounts for approximately 4% of the U.S. digital advertising market, analysts predict that post-acquisition TikTok could contribute significantly to Microsoft's growth, expanding its portfolio in the digital marketing space. 3. Impact on competitors. The acquisition of TikTok is likely to intensify competition within the social media landscape, particularly for platforms like Meta, Facebook, and Instagram. As TikTok's user base grows, currently comprising around 170 million users in the US, Meta and other social media companies may need to adapt their strategies to retain and engage users. This could lead to increased innovation in content delivery, advertising techniques, and user engagement strategies across the board. 4. Geopolitical implications. The acquisition will have geopolitical ramifications, particularly in US-China relations. By moving TikTok's operations into American hands, it could pave the way for reduced tensions regarding data privacy and national security. Conversely, it may escalate the tech competition between the two nations, as China may respond with its own measures against US tech companies operating in China. The outcome of this acquisition could serve as a precedent for how tech ownership is handled in the future, influencing policies on foreign investments in technology. 5. User experience and content moderation. Under Microsoft's ownership, there may be a shift in the platform's content moderation policies and user experience. Microsoft's emphasis on corporate responsibility and data privacy could lead to changes in how TikTok manages user data and content, potentially enhancing user trust. This may result in a more secure platform that prioritizes user safety while also aligning with regulatory expectations in the US and Europe. 6. Integration of AI and new technologies. With Microsoft's robust capabilities in artificial intelligence, we can expect TikTok to integrate more AI-driven features, enhancing content creation and personalization. The use of AI could revolutionize how users interact with the platform, leading to more tailored content feeds and innovative advertising solutions. This could also give TikTok a competitive edge over its rivals, attracting both users and advertisers. 7. Potential for global expansion. Post-acquisition, TikTok may look to expand its operations in other markets, leveraging Microsoft's resources and expertise. This could help TikTok navigate regulatory challenges in different countries and enhance its global footprint. The potential for diversification into various verticals, including e-commerce and live streaming, could be explored to maximize revenue streams. 8. Regulatory scrutiny and compliance challenges. As TikTok transitions into Microsoft's ownership, it will likely face increased regulatory scrutiny not only in the US but globally. Compliance with data protection laws, particularly the GDPR in Europe, will be critical. TikTok will need to demonstrate a commitment to user privacy and data security to alleviate concerns from regulators and users alike. Conclusion. The potential acquisition of TikTok by Microsoft marks a pivotal moment in the tech and social media landscape. As negotiations progress, we can expect significant changes in ownership structure, market dynamics, and regulatory frameworks that will shape the future of digital advertising and social media engagement. The outcome of this acquisition will not only affect Microsoft and TikTok but also set the tone for future tech acquisitions and the ongoing dialogue surrounding data privacy and national security.